We're going to start with Lyft issuing its first report as a public company, and it's a memorable one because Lyft lost $1 billion in the quarter. The company says that this will be its peak year for losses and that it sees a clear path to profitability. Boy, I really hope so, because they just lost $1 billion in 90 days.
Yeah, I think that is not easy to do.
Yes.
Despite the headlines today about one of the leaders of this country having lost $1 billion, that took him 10 years.
Right, not in 90 days.
Not in 90 days. He couldn't do that. Although he did it 3 times. But that's another story.
That's another story.
And yeah, they've projected an EBITDA loss for 1.15 to 1.175 billion. That's a rather specific range, fairly tiny range given the size of the loss. It's like a 1% delta between the high and low of that range on $3.2 to $3.3 billion in revenue. So you've got competing stories here. One, extraordinary growth at the top line. I think 95% year-over-year revenue growth for the quarter, and staggering losses. And the market today has resolved that by selling off the stock.
Right. So worth remembering that, and it's not hard to remember because it was just, a couple of weeks ago that Lyft went public at $72 a share. With the sell-off today, it's at $55. There is a price at which this stock becomes attractive, I suppose. Is the mid-50s where it is? Because and all kidding aside, that's what I was struck by. It was not that they lost $1 billion. It's that they did it in 90 days. And I don't even know how you begin to do that. So it still feels like this is much higher than I would want it to be before I put Lyft on my watch list.
Okay. Well, in saying that they lost $1 billion over 90 days, that is true, but misleading in the sense that a lot of it was related to stock option expense and the costs associated with going public. And so what they lost on an operational basis was about a quarter of that $1 billion, 1.2 billion they're going to lose for the year. So still losing 250 million on your operations when you're not, the 776 million was the revenue, and they're losing 1/3 of that in operations. And so I think that they're obviously not an attractive stock to a value investor who would want to see profits. And in terms of the growth investing public, it doesn't have any momentum stock investors interested in it because it goes down every day. And so that's not the kind of momentum, unless you're a short seller, that you're looking for. So you need to have that all this top line growth is going to translate to profits at some point. When is that going to be? And they're talking about a clear path to profitability. But Uber is going to be a well-capitalized company as of Friday, and I fight them, I guess, as to who can lose more money quickly in pursuit of customers.
Uber has set the range for their IPO at $44 to $50. I've said before, I think that's both smart of them and probably a response to what happened with Lyft stock right after they went public. So among other things, Uber is looking to get in, if not the good graces of Wall Street, certainly the better graces of Wall Street relative to Lyft.
Yeah, and they are going to be judged through the relative to Lyft prism, and as they should be, because there's a direct competitor, and Uber is in a few more areas of business. Uber Eats is a more attractive part of the business than some other parts of the business. But yeah, they have to, at this point, somewhat defend themselves from the market reaction that has befallen Lyft and say why they should be valued at the top of the range rather than the bottom or below, because people want to see there are enough fast-growing companies which have more clear paths to profitability than the one that Lyft is demonstrating so far.
Beyond Meat, perhaps, could be one of them.
Perhaps you've spent you've spent some time looking at that one. What do you think about their profits?
Well, they don't exist at the moment, but
their path.
Oh, the path. I think the path is looking pretty good for plant-based meat substitutes.
All right, and the path is looking good for transportation as a service. The question is, is the profitability of that attractive? And you're going to have a couple more shifts in the business model. The business model right now, rapid growth, but no profits. You've got a lot of people you have to pay, and you've got to compete on price against somebody else who is willing to compete with you on price, and you've got to displace all the cabs. And so the shift is going to come, of course, when autonomous vehicles become a reality, and then maybe you can take your costs down quite a bit. But those autonomous vehicles are going to have to be owned by somebody. They're going to be owned by Lyft. Are they going to be owned by third parties? Are they going to be owned by the car manufacturers? It'd be interesting to see how that plays out. But it's very hard to model, in my estimation, what this is going to look like in 5 years.
And one more factor at the moment that is not working in either Lyft's favor or Uber's favor is the current unemployment situation in America. The lowest unemployment in close to 50 years. That just makes it a little bit harder for them.
It does. It means a lot of people are getting to work. They need Lyft to help them get to work, some of them.
Yes, but in terms of the employees, the actual drivers, because as you said, they don't have the autonomous vehicles just yet. So when you have the autonomous vehicles, you care a lot less about what the employment picture is in America. At the moment, you've got a lot of people who maybe would be considering signing up as an Uber or Lyft driver part-time, maybe on the weekend, some sort of side hustle, and they're like, no, I'm good.
Yeah. Well, I think, and some of them work for Uber and Lyft. So, yeah, it's a lot of the employee situation is, and they're not all employees, they're contractors. It's a complication, and I think that they have to spell out when the profits come and in what form in order for people to be more interested in the stock, which is not responding well to today's story, which is an impressive top-line story, almost doubling revenues in a year, but that's not the whole story. Where are the profits? What are the margins going to look like when this thing is at scale?